Welcome to class 12. Here, this is your accountancy class. First of all, I would like to introduce you with your accountancy book that you are going to follow in class 12. That is Double Entry Bookkeeping by T.S. Karewal by Sultan Chand Publications. We have 3 books in this year. That is the first book, Double Entry Bookkeeping, Accounting for Not-for-Profit Organizations and Partnership Firms. Second book is Accounting for Companies, but that is yet to come in the market. Followed by the third book, Analysis of Financial Statements. But we are going to start with the first book, Double Entry Bookkeeping, with the topic Partnership Firms. Students, as in class 11, you have learnt about the various forms of organizations like sole proprietorship, partnership, company form of organization, joint Hindu family business, cooperative societies. And you have learnt in your accountancy that how the sole proprietorship, they prepare their books of account for the purpose of finding out the profit and loss at the end of the year and to know about their financial position. Because all these are the profit making organization. So their main motive is to earn profit and they have to find out the profit at the end of the year. Likewise, another form of organization that we are going to study in this class, that is partnership. We are going to learn in this class that how partnership firms, they are going to prepare their books of account, the various books of account for the purpose to find out profit or loss and to make their financial statements. But before we should start with the accounting, the books of accounting, we should know about the partnership, the concept of partnership. I mean the nature of partnership. Nature of partnership followed by features of partnership. First, I would like to discuss features of partnership because all the features jointly make the definition of the partnership. So let's start with the features of partnership. The very first feature of partnership is 2 or more persons. As there is the first form of organization, sole tradership. Sole means individual, tradership, trader means honor, single honor. Here partnership, according to the first feature, there is at least number of partners, at least 2 persons should be there to start with the partnership firm. That is limit of the partners, the minimum number of partners and the maximum number of partners in a partnership firm. Maximum number of partners. Minimum is 2 and maximum is 50. Not more than 50 according to the Companies Act. Another thing to be noted under this feature, that is who are competent to become the partners in the firm. The competent persons to become partner in the firm. So according to Indian Contract Act 1872, every person except the following persons are competent to become the partner of the firm, except these. Number 1 is a minor. A minor cannot be the partner of the firm. Minor means who does not attain age of majority, that is 18 years. So the first is minor cannot be the partner of the partnership firm. Second is person of unsound mind. Person of unsound mind who is not able to take any important business decisions. Third is person qualified by law. So students, these 3 points you have to keep it in your mind for 1 mark question, that according to the Indian Contract Act 1872, there are some exceptions of the persons who cannot be the partners of the firm: a minor, a person of unsound mind, a person disqualified by the law. So this is the feature number 1, 2 or more persons, limit of the partners, and the competent partners of the firm. Second feature of partnership is agreement. Agreement, this is a written document. Written document, this shows the relationship among partners. It contains the terms and conditions. This is an agreement, so it contains terms and conditions. The terms and conditions related to the relationship of the partners, and according to Partnership Act 1932, this agreement can be oral or written. But written agreement is preferred because of to avoid any disputes in the future time period, any of the disputes among the partners in the future time period. And this agreement is a legal document, and this legal document is to be signed by all the partners of the partnership firm, and this legal document is known as partnership deed. This document is known as partnership deed, and this partnership deed, it consists of various terms and conditions, contents and clauses. So various contents and clauses of partnership deed are like the description of partners, description of firm, description of partner, that means the name of the partner, the description and the address of the partner. Description of firm, that is name and address of the firm. Principal place of business. Principal place of business is where the address of the principal place of business where the business is located. Nature of business, the firm shall carry on, and the starting of the partnership. Starting, that means the commencement of the partnership, the date of commencement of partnership. The capital contribution of all the partner, that how much capital is to be contributed by each and individual partner in the firm. And next is Interest on capital. Interest on capital, that is the rate of interest. If allowed, that rate of interest is to be mentioned in the deed. Interest on drawings. The rate of interest on drawings that is to be charged from the partner on their drawings is to be mentioned in the deed. That is, next is profit sharing ratio. This is very important. Profit sharing ratio. As we know, in the sole proprietor, another form of organization you already had discussed, the whole profit goes to the individual owner. But here, as there's two or more partners, the profit should be shared among the partners. So in which ratio this profit is to be shared among the partner is to be mentioned in the deed, whether that is equal or any other proportion. Interest on loan. Interest on loan, the rate of interest on loan is to be mentioned in the deed. Loan means if, other than the capital, if any amount is to be advanced by the partner as a loan to the firm, and what rate of interest on interest loan is to be entitled to the partner is to be mentioned. Next is remuneration. Remuneration of the partners. Remuneration here consists of salary, commission to the partners. If it is decided that any partner entitled any kind of salary or commission, that is to be mentioned in the deed. Next is rights and duties of the partners. Rights and duties of the partners. Duration of the partnership. Duration of partnership. Duration of partnership, as you studied the type of the partnership, that is whether it is for a specific time period, whether it is based on a venture, or it depends upon the will of the partner, it is to be mentioned in the deed. Next is value of asset, that is valuation of assets. Valuation of assets, the manner in which the assets of the firm shall be valued. The assets of the firm will be revalued at the time of reconstitution. Reconstitution, that is when there is generation of a new firm. Further, in this book, we are going to study the various cases when there is reconstitution of the firm. That means when there is change in the relationship of the partners due to their profit sharing ratio must be changed, admission of the partner, retirement of the partner, death of the partner. At that time, there is need arise for valuation of assets. Next is valuation of goodwill. As you all aware of the word goodwill, this is an intangible asset, but the value of the goodwill is also to be calculated like other assets. The value of the goodwill is to be calculated by following the various methods. So methods of goodwill, how to calculate the value, we have a separate chapter in this book. There we are going to discuss in detail. Next is death of a partner. As you all know that at the time of death of a partner, the partnership firm comes to an end. That means the partnership firm dissolves. But there is a provision, if all other partners want to continue with the same firm, they can continue with the new contract. Next is about the settlement of disputes. So, as we discussed in the beginning, that it should be a written agreement, this partnership deed, preferred to be in written, so that in future time period, any kind of dispute arises among the partner, related to any of the clauses, any of the content, whether that is about their capital contribution, about their profit sharing ratio, any of the clause, this deed will solve the dispute among the partner, how they shall be settled. So this is the partnership deed contents and clauses.